Yeah, we are live. Rob, good to see you. You on the home front today?
Well, despite the background, I'm in a little town in western Colorado called Telluride.
Okay. You bring those books and that shelf everywhere with you. That's got to be a lot of work. You have your team do that for
I
you?
have a team.
Oh, good stuff.
It's
Waiting.
kind of like out of Africa or something, where you got this whole group that just, brings stuff for you.
I love it.
Anyway, and you're in Ohio.
I'm in Ohio. I have to admit, I could be a distracted, nervous wreck for the show. My beloved Cleveland Guardians at 3:08 p.m., 8 minutes from now, take on the Detroit Tigers in a loser leaves town playoff game. Winner goes to take on the Seattle Mariners in the next round. So
And you're not there.
these are the first three Indians playoff games I've I've ever not been to. And all three were at 1 o'clock this week, and my work schedule, it was just, I would have, the amount of stuff would have had to move would have just caused massive pain and suffering. So I've been just watching these games on the background, like just a nervous wreck as I've been got my
Well, that shows depth, what the role of depth in your weekly life is.
yep. Yep. There he is.
Yeah, it
Hmm.
helps if I can follow directions.
You have the wrong link.
I was trying to get on the Google Meet instead of the Zoom.
I hate that. I send those out through my Google Calendar just because everything is centralized through there, but it does include their Google Meet propaganda link, that people often confusingly click. So, but good to see you, Dustin.
Yeah, likewise. Good to be here, gentlemen. I see you're rocking your Guardians gear. What time's the game today?
It starts in 6 minutes, so I
Oh.
could be a disheveled. So,
Funny. 2 minutes ago, he said it started at 8.
well,
Now it's 6. Yeah.
not that I'm keeping track or anything, but
Yeah.
yeah, go guards today. So, but
And
I'm
is
going
the
to
series tied 1-1?
yeah, we nice comeback win yesterday. It was 1-1 pretty much the entire game. We got 5 runs in the eighth. So yeah, 1-1 and Slade Ciccone, Jack Flaherty, and winner moves on, losers season over. Guards
Rich.
Cubs rematch. Oh, from your keyboard to God's ears, Derek. I would love nothing more than that. I still am scarred deeply and emotionally from the 2016 World Series. So
Rich is wearing his Depends today, Dustin. So
Yeah.
we
yeah,
know it's a big game.
Well,
right.
I'm
Big
gonna
game.
I'm gonna pull for the Guardians. It's crazy. The Tigers actually have a couple local kids, at least local to Central Florida, but I've never been to Cleveland's stadium. So maybe, Guardians get to advance. I get the phone call from Rich. He needs someone to come with him to the next game, and I can check that off my list.
Yeah, you got to get to Progressive Field is really, I'm biased as hell, but it is a great park. So one of the real good ones. So, but that's
I need to break character, Rich. Ready?
okay.
So I'm going to show you what I'm looking at.
Okay.
And to do that, I think that I have to
Uh-oh.
uh like take off I have to have no background.
Take off your, okay, you got me worried for a second there. Take off your
No.
background. All right.
Yeah. So there's that.
There you go.
But we're gonna step over here.
Okay.
So this is Telluride.
Oh, that is
Oh,
beautiful.
wow.
Wow. Damn. Man.
Um, let's see. You can look over here. I mean, there's a work crew here, but I mean, it is just something else.
Those
Something
of
Is
you,
that a
else.
ski run right behind you, Rob?
What's that?
That nice green pasture up on the mountain. Is that actually a ski run in the wintertime?
Yeah, that's Telluride Ski Resort.
Okay.
and those
Um,
of you listening to the pod right now, we will a good time to remind you the live show, the best way to consume the big picture. ChrismanCommentary.com. to get signed up for that. But a lot of stuff in the chat already. Let's go ahead and get into it. This is the big picture, presented and sponsored by our good friends at Depth. Nearly 2 decades, fintech pioneer Carrie Milam, her outstanding EVPs, Leslie and Lindsay. They are the PR team getting fintechs noticed and fast. And the fintech space moves fast, so you need a PR partner that can keep up with the pace and get your name out there. Depthpr.com or just get a hold of Rob or I, or you could find Carrie, Leslie, Lindsay, all on LinkedIn. A great PR company, and you need your story told. They're the ones to do it. So there you go. And my name is Rich Swerbinski with Onward and Upward Consulting, also the executive director of the Ohio Mortgage Bankers now. And as always, pleased to be joined by my esteemed colleague and co-host, Rob Krisman in very, very gorgeous Telluride. Rob, good to see you.
Good to see you. Good to
Rob, is
see
that home
Dustin.
away from home? Telluride?
No.
No.
Uh, Telluride.
Vacation.
Dustin, have you ever been to Colorado?
I have.
Denver? Oh, you were
No,
just in
well,
A
Denver.
week ago, a
yeah,
week
we were
ago.
just in Denver. Yes, we were just in Denver for the Acumen conference, but I'm actually 1 year away from being an empty nester, and my wife and I plan on buying in Frisco, Colorado.
Ah,
Yep. So I've done the Breck and Vail, Beaver Creek several times for the winter. We've never spent any time in the summer, but we plan to next summer.
Everybody who everybody who comes to Colorado really likes it. And the problem with Colorado is that you glance at a map and you think, "Oh, I'll do an afternoon drive from Denver to Aspen." Or, "Oh, I think I'll take an afternoon drive from here to Telluride to, wherever." But the problem is when you actually get on the road, it's like 8 hours away, even though on the map it looks like, a 20-minute flight just because of the way the canyons are laid out. So travel among, like if I wanted to go to Aspen now, I think it's about 6 or 7 hours. And I think Aspen is probably 6 or 7 hours from Denver. So some of these places do have airports, like Telluride has an airport they've nicknamed the Nimitz because it's like an aircraft carrier. It's very short. Uh, I know Durango is really nice. My son Robbie was just there. He likes it a lot. That has an airport. So there are some small airports around. Frisco is supposed to be very nice. So yeah, the problem, of course, is the winter. If you don't like snow, I forget the elevation of Telluride, but it's pretty high up there. But I mean, it's spectacular. It's just so many vistas in Colorado are jaw dropping. It's amazing.
So are you there for work or were there for pleasure?
I'm here to smoke weed, Dustin. It's
Okay.
just
You do you,
just
Rob. I love it.
I'm just here. Uh, I'm just it's a little vague, a little working from a different place.
Yes. Yeah, my favorite home away from home is actually this place called Sunlight Basin, Wyoming. It's about an hour north of Cody, Wyoming. The problem with it is, like you talked about with Telluride and Aspen, it's so difficult to get there that it would make it near impossible to try to still have a full-time career that requires, travel and airports when everything you would look to do is a solid, 4-hour drive plus some kind of a commuter airline to a major airport to wherever you're trying to go. So Frisco, Colorado for us is probably going to be the one B to actually living in, outside of Cody, Wyoming.
Yeah, the it's interesting. The lending environment here isn't very large because it's relatively affluent, and so a lot of all cash buyers, and the houses are, 6, 8, $10 million. Whereas, if it were in Twinsburg, Ohio, the house would be about 600,000.
Yeah.
So it's location, location, location.
Yes.
love it. We never properly introduced.
Hey, Rich, has the game begun? Rich, do we lose you? You want
No,
Dustin and me just to take over here?
it's the first pitch is just about to get hurled here in a few seconds. Glaber Torres in the leadoff hole, who who terrifies me. He killed us last year in the Yankee series, but we'll see what
Is
happens.
there a famous Cleveland player? I won't say the Indians. Yeah, is there a famous Cleveland Indian player throwing out the first pitch?
Albert Bell. Albert, don't call me Joey Bell.
Is that who threw out the first pitch today? Or
No, I have no idea.
okay,
That's just the first Cleveland Indian that comes to
yeah,
mind.
Joey Bell, he was crazy. Oh my God. Um, but I don't know, bro. I don't know who threw out. Somebody threw out. Now they have like four different people throw out a first pitch. Is the way they do it now. There's like they run out a train of people before games, especially playoff games. But I don't know who it was. So
Joe Charbonneau. Joe
Super
Charbonneau.
Joe.
Did you
Yeah.
see?
He could open a beer bottle with his eye. That was his claim to fame.
My favorite Indian is Ricky Vaughn.
Ricky Vaughn.
Ricky Vaughn.
Give him the heater, Ricky.
There aren't many of them. Did
Just
you
to show
see,
you,
Rich?
real quick, just to show you what a tortured Cleveland sports town is. I remember being younger and going to see Major League in the theater, in title deprived Cleveland. And at the end of the movie, we didn't even win the title in the movie. We just, I think, won the AL pennant.
Yeah.
I mean, the place goes crazy. Like we really won a title. I mean, that's Cleveland. So
Did you see the news with out of the Phoenix Suns today?
yeah, Mortgage Matchup Center. That's a really weird sounding name. But Matt Ishbia is definitely going to take any opportunity he can to shill the UWM machine. So yeah, the Suns Arena, which will be empty all season because they're the worst team in basketball. It's the Mortgage Matchup Center. So
Mortgage matchup?
they might have to be offering like 2-1 buy downs on tickets to get people in there. But
Yeah, I always wonder why. What good a wholesale? Well, anyway, forget it. Forget it.
I'm just curious.
Go
Mortgage
ahead.
matchup. Do I not know that brand? I mean,
it's their
obviously.
new, they used to call it Be Alone or become BeAloneOfficer.com. They rebranded it as like,
Oh, beabroker.com.
yeah, it's like where
Okay, it's
brokers go.
mortgagematchup.com. Okay, makes
Yeah,
perfect sense now.
yeah. They kind of
The I'm
so
going to disagree, Rich. I'm going to say my Warriors are going to be worse than the Phoenix Suns.
no way. The Suns have nothing. They have Booker, Jalen Green, and literally like their third best players shouldn't even be in the league. It's you got Steph
That's
Curry still and Draymond and the boys.
they're all like they're all like nearly 40 years old.
yeah.
And it's the center they just added, Horford. I think he is 40.
He's over 40.
Yeah, that was a
He is
yeah,
over 40. Al Horford is over 40. I quit watching basketball after the Bulls stopped being good. What year is that? 96?
96,
There we go.
The Last Dance. There you go. And we never properly introduced our guest today. Back once again, and he is the founder, executor of what I think is the mortgage industry's most listened to podcast, TLOP, the Loan Officer Podcast, and also TLOP Originator Coaching. It is our good friend, DO, Dustin Owen. Dustin, thanks for joining us again on The Big Picture.
Rich and Rob, it is my pleasure. This is always fun to do. So thank you for having me. And what are we going to jump into? Like, what type of chaos are we going to create today?
Speaking of, all right, I'm going to jump back into sports. Um, I've been meaning to write to Rich because he's much more up on sports than I am. My sports knowledge ended in about 1968. So, Rich, you should make a list of which mortgage personalities own pieces of teams, like Stan Middleman, Bill
Mhm.
Cosgrove.
Yeah,
I think
there's
there's
quite a
isn't there
few
somebody
now.
else? And figure out where their teams came in the standings at the end of the season. Who
Well,
did the best? Bragging rights.
yeah,
You could
Phillies,
put that
Middleman.
on your
Yeah, they're
put that
still
on your LinkedIn or whatever, Facebook or wherever you put that stuff.
there. You go. Good idea for a LinkedIn post. There you go. I like it. So,
Yeah.
Will you
All right.
include my two fantasy football teams? I spent $100 on one and $150 on the other. Can you add those to the list?
No, we're baseball, Dustin.
Oh,
yeah,
baseball. I don't play fantasy baseball. I'm a huge baseball guy. My Braves, no bueno this year, but that was my sport growing up. In 68, Rob, you said you quit watching sports in 68. Did the Mets win the World Series in 68? Do you remember? Is that why you
that was
stopped
the
I think that
miracle.
watching?
was more
That's
69.
that was
Okay.
the Miracle Mets year. Was that 68 or
It was
69?
69.
69.
Yeah.
69. I think 68. Let's see, 67 was I think the Cardinals under Bob Gibson's. with Bob Gibson. I don't remember they may have won it again in '68, the
Here we go.
Cardinals.
Bill Dolly in the chat. Yeah, Cardinals. Yeah, that was Bob
Yeah.
Gibson. Was a badass man. Wow. He fun player. I got some nice Bob Gibson baseball cards that are cool.
Really? Me too.
Yeah, there we go.
Still? You still own them?
It's- oh, Dustin, you're not a regular viewer, are you? Yeah, I've when I want to get Rich amped up, I break out my books.
He casually busted out like four Nolan Ryan rookie cards on the show like 9 months ago. I almost started my heart almost stopped beating, honestly. Yeah, just like off a shelf, like in some binder. Like
They are.
I
They're
sent
but
him the potential value on email after.
I'm tempted to hire Dustin. I'm tempted to hire Rich to bring him to my home. Like, hey, Rich, I'll pay your airfare, and we'll have you under video surveillance because I don't want you slipping any like Bob Gibson's in your pocket. But to coach me on this immense collection of cards that I have from '60s and '70s, and then a smattering going forward. Anyway,
Wow.
anybody who tuned in for mortgage information is being sadly disappointed by this.
Yeah, our
This talk.
apologies, right? It's your mortgage knowledge is going up in smoke the way that Robbie's inheritance will if Rob's house ever catches on fire and those cards go up in smoke.
That's right.
Yeah,
That's right.
collectibles insurance, Rob. That's the takeaway here. So. All right, let's go ahead and get into it. And Rob, all kinds of stuff this week. We already hit on Mortgage Matchup Center, that breaking news, the Suns arena being renamed. Of course, the government is in a shutdown. That is, I guess, fairly big news. FICO drops a bombshell yesterday, basically saying they're going direct to lenders with a pricing model. And yeah, I mean, they kind of had to do something. Pulte was pressuring them, and obviously the Vantage score thing is looming. So I think it's a smart strategic move by FICO, being the first one to kind of make a move, forcing the bureaus who own Vantage and own the data that's going to set up this really interesting game of chicken to make the first move to force them to react. So I'll go to you, Rob, to get your thoughts on that madness to get things started.
And then the item that you and I were talking about earlier, which we can't address because it's too new. I saw it on Fox News that Fannie Mae, the FHFA has announced, I guess Bill Pulte has come out and said that they are going to close Fannie Mae and Freddie Mac's New York offices because of suspected fraud from Letitia.
Letitia James.
Mhm.
Yes.
Yeah, yeah. So won't that be interesting to see who, what, where, why? And then you have the HUD
HUD
verbiage,
website. The HUD
the
website.
radical
Poor Scott
left.
Turner. They went to Scott Turner for a quote on it, and he had to just fall on the sword and did I don't see anything wrong with it. Yeah. It's yeah, it's all amusing. Again, the last administration did zero with relation to housing. This one is they can't stop doing things. I don't know what is better, what I prefer, but it's certainly more entertaining. So
I I don't know. I'm tempted to
entertaining to me. Sorry, I should have clarified that.
Rich.
You know
Here
me,
we
I
go.
find the humor in everything. It's a great way to go through life.
Yeah,
Laugh as much as you laugh as
Usually I
much as you
do, but
can, and try to find the humor in everything. It's very therapeutic.
good. I'm glad
Have
because
you
yeah,
all tuned
at
into
some
the
level we're going to need therapy. But
have you tuned in the USDA website? Kelly in the comments just said, I guess there's some politically charged commentary on USDA's website as well as HUD's.
no, we'll
Interesting.
have to check that out.
Yeah,
We'll have
Because
to check that
USDA
out.
with the government shutdown thing, that puts USDA at a halt.
done. Yeah,
Yeah.
you're not doing a USDA loan at this standpoint until government opens back up.
Right. Yeah. I'm tempted, Rich, and you can talk me off of this. All right. I'm willing to hear input from you.
Okay.
I'm tempted in the subject line of my commentary to ask the question because somebody asked me this yesterday in
Mhm.
town. They asked me if I thought, could one person shut down the US and therefore the world economy? Is
Uh,
that possible?
well, we're about to find out. I mean, so, yeah, who knows? I mean, it's a little crazy, a little unprecedented. You know my take. Policy wise, human being aside, policy wise, as it relates to housing, I try to keep it to that. I like a lot of the things going on, but the tact and the manner in which they're happening seems like it could be a tad short-sighted. So, you know, we'll see. It's going to be an interesting game of chicken with this government shutdown because, as I kind of texted you the other day, I mean, you know, Trump, love him, hate him, whatever, but the Democrats have no identity right now, zero. And he's just moonwalking all over their ass. And this is kind of like their moment to draw the line in the sand. And this is going to be a very interesting game of chicken. I'm fascinated to see how this whole government shutdown thing plays out.
The interesting thing, and I've already started to write because in social media and in certain circles, some of his quotes from the past are coming back to haunt him now, saying that any government shutdown is the fault of the president's. This stuff starts at the top. It's up to the president to get the parties together and work things out. So, but yeah, it'll game of chicken, and unfortunately, the borrowers, anybody needing flood insurance, anybody wanting a USDA loan, I mean, they're the ones who suffer. Uh, as do a lot of consumers, as do how many people may be furloughed from the U.S. government? 750,000 or something.
We'll see. And DO, it's USDA. The other things that get impacted, verifications through Social Security.
Yes, the big one was verifications to the IRS, but if I understand this correctly, there's still leftover budget from the Biden administration into the IRS. I think the IRS will stay open for longer. Obviously, if the shutdown is prolonged, they'll run through that cash. But if you had to verify someone's income, so specifically probably like a self-employed person doing tax transcripts to make sure that the tax return they gave us is actually what they gave the IRS, then that could pose an issue. But right now, my understanding is not the IRS, but manually underwritten FHA files, right? FHA files that require condo approval, right? Anything where you have to reach out to HUD, most FHA loans, you'll be fine. Like all VA loans, with exception of anything that would require like a direct endorsement, right? If it requires a direct endorsement from the Department of Veteran Affairs, you're probably SOL. Most loans don't, so you're probably good. Yeah, it is sad when grown-ups can't get along. I'm in a marriage and I have to negotiate and I have to settle every single day,
Right.
but it is what it is. Whatever happened to the how you do one thing is how you do everything? Like why can't we go back to some of those principles that were maybe taught to us earlier in life? Maybe that's wishful thinking. I live in a world of unicorns and fairy tales.
I tell my kids the advice I've given my kids more than any is that life is not black and white. Like it's all shades of gray, right? And it's just finding your way in the gray and trying to stay away from extremes and everything in life. And it just feels like it is. I hate the divisiveness. I would argue it started during Obama's second term. He got really dragged through the mud his first term with Obamacare and then Trump obviously gassed the fire as it relates to just divisiveness in this country. And it's not one party, it's both sides. But I do hate where we're at. It feels like we've regressed as a society in some ways. So,
But by the
The,
way,
le-
clarification coming off the top rope with the people's elbow is the one and only Bob Nemi. Bob wanted to remind us the IRS was said to stay open by Calabria at the NBA compliance and risk as essential employees. So, Bob, appreciate you. I don't know what I would do in my life if I didn't have my wife and Bob Nemi. Both of them are quick to correct me when I misspeak, and they're the first to have my back when I need it. So I appreciate you, Bob.
Ohio NBA legend Bob Nemi.
Yes,
Yeah. So,
yes.
uh, Yeah, so we had that. We had the FICO thing. That's going to be interesting. Dustin, any thoughts on how that another game? We have the government shutdown game of chicken. Who's going to blink first? And then now FICO versus the three bureaus and Vantage Score. This is going to be fascinating to see how this plays out. Any instant thoughts, reaction?
Yeah, so I was laying on the couch last night watching the Dodgers just destroy the poor Cincinnati Reds. So I'm getting caught up on all my trade publications. It comes across the wire, the FICO announcement. This morning I did some more research. But my one thought, I mean, obviously, this can't be bad for consumers and bad for the industry if it's going to drive costs down.
Right.
However, and I'm not even trying to defend the bureaus, but there is an administrative role that they play. And, FICO wanting to go directly to the lender, beautiful. However, is FICO also going to have the administrative capabilities of the TransUnions, the Experians, or better yet, even the aggregators, right? Because we rely on our on the distributors to do everything like updates and the things that you have to do that get built into that total cost. So I guess if I were to try to summarize it better, it sounds great in theory, but will they actually be able to pull this off?
It's a great point. The operational nature of what they now have said they're going to do. It's much different than, dealing with just really a couple large customers and dealing with, yeah, I mean, it's going to be interesting to see. And, I mean, I guess probably, I don't know, they'll go to like the biggest lenders direct first, would be my guess. Obviously, money talks. And then, but yeah, I haven't even thought about it. That's a
Yeah,
great point, the
yeah,
operational aspect of
yeah.
it.
Think about it. When you're slinging loans for a living, right? You're funding thousands a month, even hundreds a month, or even tens a month out of a branch. You are consistently having to do credit updates. You're having to do rescores, re-verifications, and it's like, well, who now is going to do that? I mean, is it going to go directly from FICO into Kroll, where we're going to bypass TransUnion, Equifax, and Experian? So because I still need that third party distributor to do a lot of the clerical and administrative work. I guess that's my big unknown.
Hmm. Yeah, a lot of unknowns, and it'll be interesting to see. I was a little surprised when I saw it. Then I wasn't surprised at all after I saw it. FICO kind of needing to make some kind of, preemptive move here, and Pulte immediately tweeted his happiness at the FICO move. And yeah, so we'll see what happens with this all. And we'd welcome anybody's thoughts in the chat on how you think, yeah, FICO versus Experian, Equifax, and TransUnion plays. I could tell you how the financial markets think it's going to play out. FICO's stock is going wild, and the three bureaus all getting raked over the coals. So, yeah,
Just in time for NBA annual. I hope NBA collected their
their
their sponsorship up front.
their titanium sponsorship fee from Equifax, Experian, and TransUnion. Yeah. So,
I'm sure they did.
Yeah. So
what
And
else?
then that's another story, Rich, that we haven't talked about. And I wrote about it today, obviously, was, Marsha Davies' retirement and the NBA coming in and doing all kinds of title changes and promotions because of that. So the NBA is not immune to change itself.
I love it. Yeah, Marcia had
yeah.
a great long run. Her and Dave Stevens, really
Mhm.
got the NBA back on the tracks, really. It was, before that, with some rocky waters, and they really just turned that NBA into just a money, a business, that was kind of like built to last. And yeah, a great run for Marcia coming to an end. Very well deserved retirement for her.
Yeah,
So.
I would think I was texting with her last week, actually from the Denver airport, because I was sitting there thinking about my grandkids, and I know she has new grandkids as well. And she goes, life's short. I'm gonna, spend time with the grandkids, which I can easily see. But you're right; it'll be interesting to see how the NBA does going forward. Not that one person can change an entire organization most of the time. Some of the time, yes, but the NBA and other organizations, attendance is down to some of the regional conferences. The NBA membership anytime two big companies merge, there goes, a member of the NBA. So budgets are tight. So I don't know the financials of the NBA, but I imagine they are indicative of some of the industry in that things are things aren't things aren't as good as they were in the past.
Yeah. And, we've talked about this before. Two things currently being reviewed right now by the Trump admin are RESPA and the yellow comp rule. And, I've said this before. I feel like this is huge for NBA to influence and get our industry good outcomes with these two that are now being reviewed. I know I talked to my good friend Laura Hopkins at NBA yesterday, who's going to pick up some new responsibility in the
Yeah.
wake of Marcia's retirement. And, she assured me it's two of the top things that they're working on. And DO, you probably spend more time talking to and working with LOs than just about anybody in the industry. Your thoughts on just, the LO comp rule, hopeful outcomes is, yeah, your thoughts?
You want to wind me up and let me go on this one? I mean, this is I've been on a soapbox for at least 3, if not 4 years. May have even made some ex-employers unhappy with my rhetoric, but um, it's ugly out there. I mean, you might as well just call it 2004, 2005. And if we're going to do that, then let's truly call it 2004 and 2005 and scrap LO comp altogether. Living through it, I'm the first to tell people that look, LO compensation rules prevented people from getting screwed over, period, end of story. It did. Now, it took that pain, like a lot of regulation does, and it spread it amongst the masses, right? And so instead of 10% getting taken advantage of, 100% get to pay a little bit extra, but nobody gets overly damaged. I liked the rules. They weren't perfect, but if we're going to have rules, I come from the camp, let's enforce them. If we're going to have rules that we don't enforce, then let's just go ahead and take the gloves off. Let's loosen the reins, take off the handcuffs, whatever you want to say, and let's just go back to the way things used to be. Because I'll tell you this: the way things used to be, originators made less money per loan, and consumers got better deals. Like that was the way things used to be. When I allowed an originator to look at a rate sheet, they could price it at 105, 100, charge one in the front. We split that revenue 50-50, 60-40. And I recognize when I allowed the originator to price a loan, they priced it more aggressive, therefore it impacted their comp, but the consumer won. So the current landscape is probably my least favorite landscape. I would go back to 04, 05, 06, running up to 10. I would redo 12 through basically about 18. It was about 18 that we started to see things get off the rails. And why? I mean, go back to 18. That was our first year of like massive margin compression that we had seen since probably a nice 6 or 7 year bull run. But the way things are right now, I would love to see some kind of a stability in guardrails and rules followed by the masses.
Well, the problem with that, I mean, the rules could be out there. The question is who's going to enforce them.
Right now, nobody.
Right. And so what I'm hearing a lot of, and Dustin, maybe you can agree or disagree, I'm hearing a lot of stories about companies playing games with leads that come in and then, internally generated leads versus external leads and moving compensation around that way in terms of individual loans. Are you hearing that as well or seeing that?
1,000%. And it's across the board. It's broker, it's banker, it's large companies, it's small companies. Yes. Yes. It's widespread. I don't even think you can say it's condensed to just a small fraction. I think it's 80%. In fact, if someone wasn't playing the games, I would say the people not playing the games would probably be credit unions and actually large depositories,
Yeah.
right? But then you look at, I mean, Rob, you know this better than probably most, and definitely better than me. But like, what percentage of the overall volume is being done through those channels versus being done through the IMB or the broker channel?
10%, I mean, what
Yeah,
IMBs were what, 83% market share in 24? I don't expect too much change this year. But yeah, you're right. It's crazy. But
Yeah, and look, I'm in the camp for the record. I want loan officers and their employers to make as much money as they can, providing the most value they can to the communities they serve. I'm all for people making money. And I want the consumer to have choices and the consumer to be able to negotiate. But I don't think our current setup is one in which is conducive for that. Um, the system was broken, so we fixed it. The way that we fixed it came with its own flaws. And then it seems like over the past going on 7 years now, we've just kind of said F it. And without the rules being changed, we're operating as if the rules changed with all these workarounds, such as, oh, yeah, that was a in-house referral. I'm like, interesting. It was an in-house referral because it came from, you know, Betty Smith, who's a Remax agent. And 2 months ago, you closed a loan from Betty Smith, who's a Remax agent, and that one wasn't in-house. So which one was it? How do you differentiate? 1 month it was an in-house referral, but 1 month it wasn't when the referring agent was the same. I don't know. It's going to be interesting. I wish we would see something change sooner than later. And again, either enforce the rules we have or do away with them. I'm fine with both. I just don't trust at this standpoint a whole lot's going to get done, nor would it be important for the current administration to focus their efforts on this.
Well, I've gone round and round with folks about who is going to actually change LOCOM. If it's the CFPB, well, good luck finding somebody to change the rules because that group has been gutted.
Yeah,
And so are we stuck with what we have because there's no one at different agencies to change it? And if something requires congressional approval, well, good luck with that, right? So
yeah.
it's tough. Like we said earlier, who ends up paying the price, I think, are consumers and the loan officers and AEs out there who are just trying to help their borrowers amidst all this swirling news up in the clouds. It's a tough environment.
And I had a conversation with the CFPB when the last administration was in place and the CFPB hadn't had their teeth removed. And even that conversation was numbingly painful because I was someone coming from production street level, having to explain to my regulator what was happening, understanding that I was talking to someone who had no hands-on real world experience. And at the end of the day, what I learned is even then they didn't care because they were like, well, where can you tell me that a protected class was punitively damaged in a malicious way?
mhm.
And I was like, well, I don't know if that's happening. But what I know is you had these clear rules that we call LO compensation rules, and they are clearly being um, defied, and you're not doing anything about it. And it's creating an unfair landscape because we have Bill at the mid-sized bank, and they're like, look, we follow the rules. But Bill's competing against someone down the road who maybe isn't a depository, maybe they're an IMB, and their originator is able to go to their branch manager and say, hey, wink, wink, nod, nod, nudge. This loan was company generated. Just hook me up with a better rate. I'll take lower commission. Now, I don't fault the LO because the LO has a family to feed, and that company is trying to generate revenue and keep their lights on. And at the end of the day, did the consumer that got that cheaper rate were they punitively penalized? No, they were benefited. However, the argument would then become, well, if you gave it to that borrower, why didn't the other 10 get it? Right. And I think
Sure.
that's where the dilemma comes and the debate comes. If we're going to have rules, we need to enforce them.
Right. And the rules, I think I've mentioned this several times in my commentary that the CFPB of the last administration isn't what we need, but we need a CFPB, right? If we've got these rules, let's enforce them. We don't need more rules. Let's just enforce the ones that we have. But I don't think that's going on now. So yeah,
Yeah.
Katie
And I'll
barred
give
the
you one
door.
last example of it. We can move on to the next topic, but let's just have a friend in the industry. And that friend, for the longest time, would put in a maximum commission for both the branch level as well as the corporate level and the LO level, right? And there's a strategy behind that. It wasn't that we wanted to handcuff branches or LOs from not being able to make more than X dollars per loan, whether it's 5 grand or 9 grand, kind of irrelevant. It was we understand compensation plays into the overall interest rate we're delivering to the street. And I don't need to make 9 grand on a loan. I may be happy making 5 grand on a loan. But in order to do so legally, I was to have that set rate. And that worked really well. But at this standpoint, this friend of mine was like, I'm removing all of my max comp, meaning if I can make $30,000 gross revenue on a loan, I will. And if I can't, don't worry about it because I will make the pricing exception, make the originator check the box inside of the LOS that claims that loan was a company generated loan. I'll pay the loan officer 50 bips, not 125, and life's all good. And it's like, well, that was the world we lived in that we were trying to prevent, which, is essentially I'm going to price it as high as I can get and hope I can get it. If not, I'll just work it down and I'll pay my LO less. Now we have originators who are truly being compensated based on the interest rates they provide to the consumer. But it is happening. It's real. I've almost given up hope that this topic will gain any type of traction or movement for any time in the foreseeable future.
Well, usually when people talk about LO comp, they immediately bring up why can't we have different comp for bond loans? And then why can't loan officers reduce their comp in order to help the consumer? Why can't they negotiate? Why can't they negotiate? Those seem to be the two things that most people bring up.
Yeah, and
Um,
the NBA has advocated on our behalf decently on both those topics. The bond loan issue, I think, is, I mean, granted, look, I'm coming from that of someone who runs a sales division. The bond loan is yes, we should be able to pay less on a bond loan. The consumer, that rate is typically fixed, and it's for a consumer who's getting a benefit to begin with. So no one's going to be damaged, but those loans do bring in less revenue. They cost more money to carry on your warehouse line. They cost more money to originate. Um, the only concern, Rob, I ever had with, well, I should be able to lower my commission based on giving a consumer a better rate in a competitive environment is you have a lot of people that will price at the tip top as they can go. And when you audit them, 90% of their loans will all be exceptions. So at which point I think that's doing away with the essence of that strategy. What I do like, and I think a loan originator, if they make a mistake, right? They misquote something, they don't close in time, then we have to eat some lock extensions. There's a cost to cure, or even an uncollected appraisal. Yes, I learned the hard way. I feel like a boomer saying this. When on my time, that came out of my commission. And I quickly learned how to be a more effective and efficient originator. So I guess what I'm saying is two of those I could get behind all day. My one concern of allowing lower comp in a competitive situation is how many times would that be abused? And the strategy to abuse it is I'm just going to price everything at 105 and I'll make an exception on 90% of the loans.
Hmm. This is the big picture, presented and sponsored by our good friends at Depth, the PR team getting fintechs noticed and fast. Check them out at depthpr.com. And yeah, it certainly is the Wild West out there right now. I work with banks, credit unions, IMBs. Their interpretation of LO comp and RESPA is so wildly different. IMBs, to your point, 3.5 years into a bear market, very challenging business climate, no CFPB, Republican administration. Yeah, people feel even more empowered than usual to play a little bit loosey goosey, a big part of a changing landscape. And another changing landscape, Rob has alluded to this in the
well,
past.
Rich, be careful now, Rich. We've got like 30 seconds left.
Yeah, I
Uh-oh.
know.
You're
I
bringing
had
up
to bring
a
up, DULP. I'm hearing more and more anecdotally from lender clients of mine that they seem to be getting tighter. And it seems like what's happening is very quietly and subtly, Fannie and Freddie are doing what Mark Calabria told us on this show 3 times they would do before they went public and shrink the last five, the riskiest 5% of the credit box. DL, you talked to a ton of LOs. Are you hearing this at all? Is there any validity to that theory?
100%. Yes. You talk to any originator, DU and LPA, things that were flying off, like flying through the systems with accepts or approves are not. And strategically, if Fannie and Freddie truly are going to be released and, privatized, et cetera, that would make perfect sense.
Yeah. Yeah. And bulk of that goes to really to the non-QM market, that business that would have been Fannie Freddie. We've chronicled here. It's about 7% of the market, I think, right now. It's historically been 3 or 4. So we could see another bump up in that end of the market, and definitely some lender clients I'm advising right now that don't have non-QM outlets to make sure you have a couple good ones because it's becoming a bigger piece of the pie. So. Dio, how do people find you? Anything to plug? What do you got going on here in October?
Yeah, well, I have a lot coming on in October. I'll be at Sales Mastery, then I'll be at Fuse in Nashville before I head up to Wisconsin for the Wisconsin MBA. But I'd tell you to check out my YouTube channel. It's TLOP or the Loan Officer Podcast. It's the best way to watch our show, just like we can watch y'all's show on Rob's YouTube channel. Make sure you're tuned in to the Loan Officer Podcast. I think it is the number one podcast. I tell people it is, but I'm pretty confident in terms of downloads. We
Mhm.
get about 1 million downloads a year, so I think it puts us somewhere in that ballpark. But it's called the Loan Officer Podcast. We affectionately call it TLOP, and because of the podcast popularity, I launched a year ago TLOP's Originator Coaching. So
Love it.
we coach loan originators, branch managers, etc., based on the show's wild success.
Love
how
it.
do you have time for your day job?
I work 7 days a week. I love what I do. I really love what I do. It only put me in the hospital once. So, one time is a fluke, 2 times is maybe something to be concerned about.
How's the
There we
healthcare in
have
Frisco?
Yeah,
it.
probably better than it is in Florida. Actually, Central Florida, we have great healthcare in Central Florida, honestly. But
You
um,
live in the villages?
yeah, not
No.
yet. No, I mean, I'm bald like you, Rob, but I'm not as gray yet.
Is there
Yeah.
still there used to be I used to know the guy that ran it. I've lost touch with him. There used to be like one mortgage company that did all the mortgages for the villages. Is that still the way that works? They were huge. It was
So
just the
that's an
villages.
hour. That's an hour and 15 north of me, and I just never need to go to the villages. I always drive through it on my way somewhere north. So I
Mhm.
wouldn't know, Rob. I should know that. I don't.
There you go. Rob, anything where your travels taking you these next couple weeks? Anywhere exciting?
Home.
Home. No place like home. There you go. All right. Well, good stuff.
Thank you, Lacey Lopez. I appreciate that. By the way, great comment in the bottom.
Love
Appreciate
it.
you.
A lot of great commentary in the chat today, and want to thank all of you first and foremost for making part of your Thursday afternoon to join us here. We're live every Thursday, 3 p.m. Eastern. Go to charismacommentary.com to get signed up for the live, and of course the pod and the YouTube. But I want to thank our guest, Dustin Owen. Dustin, thank you for joining us again.
Thank
Rich,
you.
Rob,
Thank
thank
you.
you so much. I love this. This is fun.
Love it. And Rob, as always, great conversation. Good to see you. And yeah, hopefully you got some good plans for the weekend. So
Good luck to
Absolutely.
your
All right,
Guardians.
guys. Yeah, good luck, Cleveland's baseball team.
first and third, Tigers, one out. We just took
All
out our
right, over and out.
help me.
I'm
Oh
I'm
my
done.
God. All right. Have a good
Bye,
weekend.
guys.
Take care.